Is the pace of M&A and just transactions going to also continue? Are you getting a lot of inbounds? What's your expectation for 2021, Bob, when it comes to obviously a sector that has been very strong and sporting very high valuations?
So we think it's an amazing time and an amazing environment for our clients. We think our clients have never had as much choice. And maybe starting with M&A, what a year 2020 was as far as a tale of two halves, right? So you only had about 50 billion of U.S. tech M&A in the first half of the year. That went up 5x in the second half of the year. So a big ramp in growth there in U.S. tech. Globally, you're having a pretty good year in M&A, right? It's going to be about 3.2 trillion or so. Not as good as the two most recent years, but sort of in line with 2016, 17. So good global M&A, once again, back half loaded. The U.S. also shows that as well, around 1.2 trillion or so of M&A expected this year, which isn't that far from the 16, 17 numbers. So good years in M&A, which means the M&A market is open. And importantly, David, as you know, premiums have gone. So typically premiums are around 30%, give or take. Now they're up about 20% or so. So that one avenue is going to be there for our clients that want to consider that route. What I think is interesting, though, are some of these other trends that have emerged. And maybe as you think about going public, there's a couple things to hit on. You can maybe do a SPAC, if that's interesting to you. You can maybe do a traditional IPO, maybe with some modifications. You could also do a direct listing. But let's hit on SPACs for a second, because this is a phenomenon, David, that I think is pretty phenomenal recently in our careers. So in 2020, you've had over 210 SPACs done this year, right? Raising over $70 billion. And that's up over 59 versus last year. So a big spike this year. What's interesting to me, though, quite honestly, is the de-SPAC, right? The M&A part of this, David, where the 45 companies in 2020 that have de-SPAC, since that announcement to current, to today, those names are up 70%. Which is tremendous, right? It's just a tremendous return there for investors and for the companies. So that's great to see. A little less than what we're seeing in the traditional IPOs, but we'll get there in a second. So SPACs, we think, is a viable alternative for companies right now to consider what they want to do. The traditional IPO has been tremendous, as you know. So we've had 30 tech U.S. IPOs this year. Right. They're up over 100%, to current right now. But what I think is interesting there, everyone always talks about the pop, right? While the pop has been big, what I think is interesting is retail's made money as well on average with this. So if you take from the day one pop, after that's happened, till today, you've made about 30%, a good return. And in fact, David, as you know, building your portfolio may take some time, building your position. So if you go 30 days till today, you're still up 20%. So the U.S. tech IPO market has been very, very strong as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.